Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and today I'm glad to be joined by Kim Grauer, Head of Research at Chainalysis. Kim, thanks so much for joining us.
Thanks for having me.
All right, so Kim, for those who don't know you, you want to give a little background about who you are and how you got into blockchain?
Sure. I'm Kim Grauer. I'm currently the Head of Research at Chainalysis, and I've been in this position for 6 months. I was formerly a senior economist at the company for 2 years. I actually just hit my 3-year anniversary at Chainalysis, which was very exciting. What I do at Chainalysis is I have a really long lead to just research topics that might be of interest for people. One of the things that you might have seen is our crypto crime report, which comes out once a year. And actually, we're about to get started on that again, where we found last year that around 1% of all blockchain level activity is associated with something illicit. And so and we get to break out all of the different types of crime, but now I also have to focus on that other 99% of activity. So what else is happening besides illicit activity? So you'll see a lot of the research that I do coming out on our blog, how much merchant service activity or payment processing is going on, what might be impacting these trends that we're seeing. We do a lot of research around darknet marketplaces, and there was a time period when I got to do a lot of investigations on darknet marketplaces. So my job has really been many things. And before this, though, I was working for the city of New York doing economics research. And there I worked for what's called the New York City Economic Development Corporation. And they do a lot of work on, leasing out the lands towards initiatives to help with economic growth. And a pet project I would do there was, write about blockchain and cryptocurrency and whether this should be on the radar of people doing economic research for the city. But long before that, I got into cryptocurrency. When I was in school, I was studying economics and I took a game theory course, which I did not want to take. And kind of to spite the teacher a little bit, I was like, I'm going to take on this random topic, Bitcoin, which no one had heard of, 2013 or something, or it wasn't nearly as big as it was now. And my questions that I were asking were around what would need to happen for Bitcoin specifically to be globally adopted. But then I just went down the rabbit hole, and then I ended up getting really into it. So that's kind of my journey.
And has Bitcoin hit those points, hit those markers that you theorized back in school for mass adoption? Has Bitcoin hit that?
I don't think that it's played out in the full way that I was thinking on a very long-term scale. I think we're still in like the very beginning stages of general adoption. So I was thinking on the 10-year, 20-year, 30-year, 50-year mark. I mean, I was thinking along the lines of the history of currencies, when including back to when we left the gold standard, and just on a longer scale. So I think that it's still kind of playing out, but I think that I probably would now that I'm so much more familiar with crypto space than I was back then, I probably would have come to different conclusions anyway. So.
And right now you're head of research for Chainalysis, and that kind of was born out of the aftermath of the Mt. Gox a hack where one of the beautiful things about blockchain, the great potential, is that it is transparent, and these are open ledgers, these are public ledgers, and you just have to have the time and the willpower to actually analyze, these chains, and that's kind of where you guys come in. And historically, I think a lot of people have associated you guys with research into crime and illicit activity, like you were mentioning. But that represents just 1% of the activity on the blockchain, and there's a whole lot more. So you guys are actually coming out with your geography of crypto report. Should be coming out soon. I know it's coming out sometime in September. You want to go a little bit into that and kind of the takeaways. I mean, let's start off with this. You guys have the global crypto adoption index. Let's talk about that. How do you guys come up with that score, and what can we tell based off that score?
Yeah, so I will I'll start by saying, if we step back a little bit, what does Chainalysis do? And for those of you who aren't familiar, the heart and like the bread and butter of what we do is find services that accept or transact with cryptocurrency and basically identify them so that you can see, so we can quantify how much activity is going in and out of services. Now, so the services can be many things. There are exchanges, there are peer-to-peer exchanges, there's gambling, there's hosted wallets. There's a lot of different types of services that we can look at, and several of those categories are illicit. So illicit, it will be darknet marketplaces, it'll be hacked, stolen funds, scammed funds. And so, by being able to monitor the funds going in and out of all of these services, we can actually start to get a really strong sense of how much activity is being used in different types of services. So we've been around, for a very long time, since 2015 at least, and we've been doing this for all of those years, finding services, trying to improve, people's understanding of what's going on the blockchain. And what we realized for this geo report was that there are going to be services that predominantly serve certain regions. So an exchange that mostly serves China, for example, then if we look at that alongside which services are being mostly used in China, we can start to get a better sense of how people are using cryptocurrency in China versus, for example, North America. Mm-hmm. And we realize that we kind of have an obligation to do this because we're really in the best position to start answering these questions. A lot of the research you'll see around how people are using cryptocurrency in different parts of the world is at this point really anecdotal. And so we were like, we're sitting on this data set. We have a good methodology for how to divide out all these services and look at their activity by region. We should do that because, like what you said before, we really are good at looking at that 1% of crime, but we're not as good at talking about this other 99%. And so we wanted to get better at that. And another thing that came out of the GEO report was the fact that we could start to see that there are different factors impacting adoption in different regions. It's not just cryptocurrency. The other 99% is used is because cryptocurrency is speculative. It's how do we look at the reasons driving adoption in Nigeria versus Venezuela. And those are two sections that are really interesting to look at. So our actual methodology is that we combine the services that we have, the blockchain level activity, with web traffic data. Okay, so we have this service, 98% of its web traffic is based in China. So we can then assume that potentially around 98% of the total on-chain value is going to be associated with Chinese-based customers. And we do that also we do that across every single service that we have, which are thousands and thousands of services. And then you start to be able to get a better picture of what share of the African market is large transfers that have directly gone between two exchanges, and what percent are retail transfers that are coming from abroad. And you can really start to see trends that are happening around the world. So that's kind of the long-winded answer for our methodology, why we think this is important, and I didn't even get into the takeaways. So
we could definitely get into the takeaways. Let's start with that. I mean, listen, you guys are looking at this data, and before actually we dive in, I kind of want to. I was curious on my own of just kind of the data sets you guys are working with. Are you guys simply looking, at the same data that everyone else could potentially look at, the public blockchain, or do you guys actually have access to data that kind of, not everyone has access to, and that gives you a kind of a fuller picture of what's going on the blockchain?
We use the data that everyone has access to. The difference is we we have built out proprietary heuristics that automatically can analyze that public blockchain. So whereas if you are familiar with a block explorer, you might log on to a block explorer and look at the most recent transfers or transactions that are happening on Bitcoin, for example. And you would see from one wallet, a long alphanumeric string of numbers, and then an amount of Bitcoin, a transaction hash, and those funds are going to another, Bitcoin wallet or address. Whereas we will, through, several heuristics, what you'll be able to see is, okay, actually that's not what we're seeing is, Gemini sending to Coinbase. And so we're able, our CEO says that we're the phone book of the blockchain. And while this is public data, there's the core of what allows us to be different than anyone who just wants to set up shop, since this is public data, is the fact that we've been around for so many years doing this, that we have developed these proprietary heuristics to be able to, do this. We interact with services, so we can track transactions and help gain. So there's a lot that goes into processing this data that would prevent just anyone from doing what we do.
So now taking those advanced models and heuristics, what were some of the more shocking or interesting takeaways from the GEO report?
The first thing that we found was that cryptocurrency really is a global phenomenon. We found activity in most countries around the world, at least some type of cryptocurrency activity, whether it be small transfers or large transfers. And this was shocking to us because I didn't go in to this research thinking, oh, I think about half the countries will have activity, but I didn't know what to expect. And so seeing our global map just light up in most countries, it's exciting and it's cool. And then supplementing that with the conversations that we had on the ground made us, okay, this isn't cool. This isn't just cool. This is also kind of true. And we're hearing this in the stories that the people are saying. My research approach is, I have the on-chain data, but one of the limitations is there might be a transfer from, Coinbase to BitSo. Coinbase being a predominantly North American exchange, BitSo being a predominantly Mexican exchange. It might look like a remittance payment. We know that there's a really large remittance market between North America and Mexico, but I can't say for sure what that transfer is unless I were to talk to the person who initiated the transfer and say, were you sending a remittance payment? So, which I'm not going to do because there's just way too many transfers. So I combine interviews with the research that I do, working with journalists who have great connections on the ground, working with, like we have many customers. We get to work with our customers. We get to work with prospects, and we get to ask them, what types of activity are you seeing? And combine that with, do you have someone who runs a shop who we could talk to who accepts cryptocurrency? And so just going back to your question, I guess the next really interesting thing would be that we found that, Ukraine and Russia were at the top, performing at the top of the index that we created. And again, didn't know which country to necessarily think was going to be on the top. But when we found that it was Ukraine and Russia, the next thing to do is, talk to a lot of people based in the region. And the feedback we got was actually, this isn't surprising to people who are living in the region. They're saying this makes a lot of sense for all these reasons that we point out in the report. And so maybe just what is the most interesting overall is just the fact that we're starting to be able to do this and to answer questions about regional activity in cryptocurrency, which has been really rewarding.
Yeah. So, when you guys are looking at that data, these Eastern European countries, Ukraine is high up there. Oh, are we able to get a better idea of what kind of use cases were driving this type of transactions there? Is this retail investors? Is this remittances? Do you have a better idea of kind of what's driving the transactions over there?
We supplemented the research that we did with a lot of interviews, and since Ukraine was at the top, we talked to a lot of people based in Ukraine. We heard a lot about banking issues in Ukraine and also Russia. Maybe there's a general distrust of the banks. In Ukraine, we heard about there being a lot of regulations surrounding cross-border payments, whether that be a cap on the daily amounts you can send or just it's generally difficult. But people were talking about, specifically in Ukraine, using cryptocurrency to send funds across the border, whether maybe you left Ukraine and are sending money back home in the remittance kind of type of transfer. We also heard about a history of using digital payments in Russia specifically that made the transfer to using cryptocurrency much more seamless. So there's more small businesses that are accepting cryptocurrency, and people are more familiar with how to use digital payments because of that history of using web money, Yandex, other things that have made people just generally more open and willing to participate in a new type of digital payment. And so that in conjunction with people wanting to just diversify into using cryptocurrencies, having exposure to cryptocurrencies as an alternate saving method. So these are similar to a lot of the other regions. There's not, we saw remittances in many regions. We saw cross-border payments. We saw cross-border payments being a big part of North America's story. Mm-hmm. And and Ukraine and Russia in particular, they weren't, so the index is based on 4 metrics. It's a combination of these 4 different metrics because each one of them separately doesn't do enough to capture activity. We have the retail transfers, we have the total transfers, we have the number of transfers, and we have the peer-to-peer world. And we kind of smushed these all together, ranked them, and so you will then have your ranking. And Ukraine and Russia weren't led by any one of those metrics. So whereas in Venezuela, peer-to-peer was, it was number 1 in peer-to-peer, but then much lower in retail, for example. Whereas Ukraine and Russia were pretty much towards the top across all 4 metrics, but not at the top. So I think they were in, number 4, between 4 and 11. And so that is further evidence that there's just a general across the board penetration of cryptocurrency in these regions. And from there, you then go and talk to people and ask them, what are you using cryptocurrency for? We got to speak to regulators in the region, the Ukrainian Center for Digital Transformation, and educate people on these things and learn from them. So,
yeah, in the past, one thing that's kind of come to the forefront was that a lot of exchange or reported exchange volume was faked. In the past, there's been a lot of wash trading going on. Do you still see that when you guys are kind of crunching the numbers, around the crypto sphere? Are you guys still seeing that large amount of wash trading, or just there's less focus on reported volume these days, so there is less of that going on?
We are lucky to be living in the on-chain data set, which means it's not reported by the exchanges. If you were to fake the volumes, you'd have to pay to do it because you have to pay for transfers. So it's not outside the realm of possibility, but it's probably unlikely that the on-chain volumes are faked. And because of that, when I was starting this geo report, I was thinking I really should figure out the trading volumes and figure out how to incorporate them, because it's a big part of the story. But then I decided just to stick to our data set, stick to the on-chain data, because of how there's not the potential for there to be faked volumes. And this is just the truth. This is something that, you know, you can see actual people actually making transfers between different services. Whereas the order book data, it can be faked. Not to say that it's not usable. In fact, it probably is very, very interesting once you really get into down into it. And, you know, there's definitely room for us to incorporate more of that in the future. One way that we do think about, you know, the relationship between trading volumes and on-chain activity is with a metric called trade intensity, which you can find on our markets homepage, which is kind of a new product or a new data offering that we've launched on our website. And it looks at the relationship between the amount of traded volume on an exchange against the amount of cryptocurrency that has come into that exchange. And one thing that we do find in the report is that on Eastern Asian-based exchanges, that the ratio between the amount of traded volume and on-chain volume is about 5-to-1, which means that
Wow.
every Bitcoin that goes onto an Eastern Asian exchange is then traded 5 times more than on a North American exchange. Is that because of faked volumes? We haven't definitively quantified that. We find it interesting. There could be some real reasons why that 5x relationship exists. Maybe there's just much more speculative trading going on these Eastern Asian, you know, exchanges that list all of these altcoins, versus, you know, North America, where you would see more institutional people getting in for institutional purposes, custodying, where you wouldn't have that same level of intensity around the trading. But, you know, it's always that we kind of think about this wash trading faked volumes. But in direct answer to your question, we don't actually have a heuristic right now to speak to that.
Mm-hmm. And, you know, for us, when we're speaking, you know, it's interesting. Ooh, I wonder why it's 5-to-1. And these are more, you know, intellectual exercises, but, you know, on the business end, I'm sure there are plenty of clients out there for Chainalysis that does want this information, that kind of does want to gain access to these kind of unique insights. And, you know, historically, definitely on the criminal stuff that has been government agencies. And I do want to touch upon that. But before we get into that, what's the interest from institutional investors? You know, now that institutions are slowly coming in to the blockchain space, and as opposed to, you know, a retail investor, institutions are willing to pay good money to be as informed as possible, because many of them are data driven. Is that a big business model for Chainalysis to kind of supply institutions with this interesting insight?
Chainalysis puts a lot of resource, which I'm thankful for, a lot of resources into research. So they've dedicated a lot into people who just think about the blockchain and try to bring transparency to the blockchain. That's the foundation of my job, and, you know, several other people at the company. And my personal mission is really around education and getting people comfortable with this space. And, you know, annual crime reports, geography reports are certainly one way to do it, and I think a good way to do it. I think that we're still in a place where the industry needs as much of this research as possible. Even though there might not be a direct impact from this geography report or from the crime report, they kind of slowly get baked into the people's attitudes towards cryptocurrency in general. That's how I, you know, view myself as impacting institutional investors. Our markets product is it's like, it's not a product, it's just not, it's a data offering on our website, is, thinking about getting institutions comfortable in this space. Mm-hmm. And so that's kind of how we use our research to impact business right now. Mm-hmm. But I think that's the extent of how I work with institutions. I talk to them a lot, especially when I'm trying to get information from them, and ask them what their experiences are, what data sources do you use, what's of interest to you, what do you need to see to get into this space. And they're definitely increasingly really interested, and they're expressing there's been a lot of increased activity in the past year, and this is kind of really happening in an organic way. So we'll see, we'll evolve with the industry as best we can, and we'll see what the industry needs to get those institutions really comfortable. Do they need more products? Do they need more research? Do they need more reports? I personally think that as many public reports as possible that can inform everyone is probably the way to do it, but we'll see.
Yeah, and you guys recently partnered with ETC Labs to provide Chainalysis KYT. You want to explain a little bit what that is?
That's one of our core products. It's transaction monitoring. So you can hook up or purchase our KYT services, and then you'll be able to have basically a really efficient compliance dashboard to make sure you're not doing business with people who are doing illicit things. Mm-hmm. And so it's really a kind of a tool that empowers compliance officers to be aware of who they're onboarding on their exchanges. And we do it at the transaction level. So each transaction is going through the system, and you can see if the funds are coming directly from a darknet marketplace, maybe coming indirectly from a darknet marketplace, and give you as much information as you need to feel like you are able to satisfy your compliance obligations.
Mm-hmm. Well, I mean, this comes from from a regulatory a place where these exchanges have to be compliant with local regulation wherever they are situated. And because you are interacting with them and providing these kind of tools to them, do you get a general sense and do you interact with regulators in the field? Do regulators come to you guys and try to understand better the industry and try to understand how to set the rules more accurately? Because at the end of the day, the first step in doing business, and the first step in writing laws, and the first step in many areas of life is educating yourself. And that's a little bit about what you were saying draws you to this. Do you feel also that the regulators also come and try to educate themselves using your data as well?
I think that we definitely have, I just thinking about attendance, I don't have like the breakout now, but I think regulators do frequently attend our webinars and download our reports. And I think that it's, if you're a regulator and you're interested in crime and you're scoping how much criminal activity there is in the blockchain, I think that you would probably use our crypto crime report as the first step to kind of introducing yourself to the world of crypto crime. And I think a lot about what regulators need to know or what they want to know. I try and put my regulator hat on and think about what's important for them to make their decisions. We know that, the impact of regulations is really profound. I was talking to some people who work on an exchange in India, and when basically the Supreme Court of India outlawed cryptocurrency payments, said that you can't convert the rupee to Bitcoin, their business suffered, and they want to be compliant. So they're not like going to go find other means to get around these regulations. They were just impacted, but they were eager to remain compliant, so adapted in certain ways. But potentially the reason why this law passed was because, the government is like, is this just used for money laundering? Is this just people sending drug money around? And, that's an instinct that people want to be responsible when they're making regulations. And so to the extent that we can show people how much cryptocurrency is used for crime, we can make them feel, okay, it's not all drug money. It's, we found 1% is associated with illicit activity. Maybe we can help you to think about how much your fiat currency is used in illicit activity. Maybe it's not as different as you might have thought. And so that's kind of the way that regulations feed into my work. I think that we also wanted to talk a lot about regulations in the GEO report, where different countries are at in terms of how legal the cryptocurrencies are, what's impacting the decisions of governments to do what they do. And yeah, I think that's pretty much. We do also have a global head of policy at Chainalysis whose sole job is to think about global policies related to cryptocurrency, and he'll do a lot of talks and work with people to kind of stay on top of where regulations are around the world. And yeah, so he's kind of your go-to policy guy. Mm-hmm. If you need an assessment of what policies are happening in Latin America versus and how that impacts cryptocurrency adoption.
And I think it's very important what you're talking about, because essentially too often if you go just by anecdotal evidence, especially if you're not involved in the crypto space, if you're an outsider of the crypto space, if you're a regulator, if you're a government official, if you're someone who only hears about it, a story from the crypto sphere, once it hits the mainstream, it's either going to be about crazy price speculation or mm-hmm. some big illicit activity. And I think the most recent example that kind of hit the mainstream was the Twitter hack, where it ended up being a young man from I believe it was the United States, who kind of using social engineering and social hacking got access to Twitter's internal tools, and then utilized the Twitter profiles of some big people, and for people in the crypto sphere, this is a classic scam. Hey, you send me 1 Bitcoin, I'll send you 2 back. We mm-hmm. know it, but people who are less educated, in these tactics, would fell for it, and that made mainstream news. That was got a lot of exposure, and so that does paint crypto in a bad light on the mainstream. And so I do think that the work you guys are doing, where you're actually providing concrete data and showing that, hey, this is just a very small percentage of the transactions, of the activity is actually illicit, is wonderful. But two, you guys also helped on the other end. You guys were involved in helping the government actually track down the hacker there. Is that correct?
Yeah. We're proud to say that it's the Chainalysis tools aided in the investigation in this particular case, which was exciting. Mm-hmm. Mm-hmm.
And I think that does represent a big part of Chainalysis business. I read somewhere, I think it was about someone for your company said about 2/3 of your revenue comes from government contracts, and that's mm-hmm. okay. It might not be accurate as of today, but the fact that you do essentially play this pivotal role where the government has the need to kind of keep an eye on things in the crypto space, but they don't have the expertise, and you guys are kind of provide them with those tools. So my question is that as we are seeing this recent explosion in DeFi, in decentralized finance, where it's kind of, it's kind of much easier to track and kind of see what's going on when it's going from exchange to exchange, a centralized exchange. How does DeFi affect things? How does DeFi affect your ability to track things? When things are being tokenized and put in an automated market maker, and then put in for yield farming, and then borrowed out. Like, are you able to track that to the same extent that you're able to track a simple exchange to exchange transaction?
Yeah, DeFi is definitely a interesting and kind of a blowing up space. I think the answer is we can track when cryptocurrencies are sent to those DeFi contracts, and like pretty much everything, cryptocurrency tends to represent, one stage of a criminal process.
Mm-hmm.
If you buy drugs from a darknet marketplace and send it to your wallet, I guess that's the entire kind of life cycle of the crime, unless you think about, okay, where did the drugs come from? How did they buy the drugs? Where did the whole kind of supply chain of criminal activity? And so considering that we are pretty much plugged in on the crypto crime, on the cryptocurrency kind of component of that supply chain of criminal activity, we'll be able to always help with some component of an investigation when it involves a cryptocurrency that we track. So that if the funds move to an exchange and then are converted to fiat, that's kind of where we would end already. So I think DeFi does pose new challenges to us. I don't think it's completely new or different in terms of how our business model, is going to be impacted. But I think that it's still something, I'll be curious to see where DeFi is at in the next year or so. And just like a final note is I've been really preoccupied with thinking about money laundering in the past year or so. We put out some research on trying to quantify how much money laundering there is using cryptocurrency last year by looking at all of the exit ramps of funds that are receiving illicit activity. And one of the most interesting things about money laundering that I learned early on is that when you talk to someone in the fiat world about money laundering, they will laugh at you because it's impossible to quantify, because every single investigation is unique. You can't, go like beep or beep and then see how much money laundering there is, because you need to say this person leveraged bank accounts in these unique countries and then, use cell phone deposits. Like, it's a very specific investigation that allows you to get an understanding of how money laundering worked in a situation. And the same does apply to cryptocurrency. And a lot of people will ask how much money laundering is there on cryptocurrency, and while we'll do our best attempt to say how much illicit activity started on chain, we're still, it's a problem that there's so many limitations to. So how much criminal activity is happening on DeFi, we'll do our best to approximate that with the tools that we have, but ultimately it's going to be inadequate, because every investigation where DeFi might have been used is different and requires a law enforcement investigation, and DeFi may have been used in a completely different way for each investigation. And so it kind of speaks to some of the challenges around quantifying how much criminal activity there is, and is the answer to why you and I don't know how much money is used for drug purchases in the world, how much money laundering there is happening using the US dollar, because of this problem, which is that you can't at scale see how much criminal activity is how much money laundering is happening using the US dollar. So I think that was like a long-winded way of answering your question, but it's complicated.
Well, I mean, my question is more this because, like we said, everything, is on chain, in the regular, blockchain, exchange to exchange, doing transactions. And then as long as you track, as long as you track the on ramp, and then you're there for the off ramp, and then, and boom, you got the person. But does just like for the positive, where DeFi has brought a lot of interesting use cases, a lot of great, new, exciting use cases, has it brought any interesting illegal use cases? For instance, let's say I launch a scam token or I do a hack and I steal funds. And historically, you'll see me take the funds, the stolen funds from wallet A, bring it to my own wallet B, and then I want to turn this into fiat money. I want to be able to utilize this money. So I will take it to an exchange and off ramp it, and boom, you tracked it. But with DeFi, can I take stolen funds, and in order to get value out of it, I don't even need to off ramp it. I could use that as collateral to then get the funds, and now make value, make money with these new funds. Would you be able to track the money that I'm making with my minted, let's say with my DAI, if I mint DAI, or if I use stolen funds for collateral, does that now enable me to kind of do what I want, not untrackable, but kind of unstoppable, with that leverage I just got, with that borrowed money?
I think probably the answer to your question is you need an investigation from law enforcement. I think that you could use our software to track where the blockchain transfers happened. We can tell you when Bitcoin was sent, to a DeFi contract. But to understand this was used as leverage, and this was this is coming, all of the other components of the investigation that would require maybe talking to the DeFi platform, if that's possible, or the administrators, talking to, finding out more about the individual that is behind this this activity. That's all going to need to be led by law enforcement, and we will provide the tools to law enforcement to help them to go about creating a holistic investigation. But we won't be able to answer some of those off-chain questions that a law enforcement officer might be interested in, namely, who is the person behind this transfer? We don't even at all mess with that. We just show you transfers went from this service to that service, and then we can to some degree do some advanced analytics. If there's statistical work that you can do, we'll definitely be a part of that. But anything that is going to go beyond that might require a subpoena, that's when it's kind of in the court of law enforcement.
Mm-hmm. Well, I mean, I think law enforcement's about to be in for a rude awakening, because just like the rest of us, it's really almost impossible or really tough to know who's truly behind these decentralized projects. If you look at, last week there was a whole thing with Sushi Swap and Chef Nomi. I don't know if you were following, but is it a he? Is it a she? Is it a group of people? No one really knows, and I have a feeling that law enforcement will also have trouble in those situations. And I think that's a pretty big difference between DeFi and CeFi, where historically, like you said, a lot of your investigation, or even if it's a law enforcement investigation, isn't just looking at on-chain data, but then you're going to go to the actual exchange. You're going to go to the offices of the exchange and talk to them, say, hey, what is this? What is this? What is this? But when it comes to a lot of these DeFi projects, it is not known. There is no office behind it. There's not always known the team behind it. And so I think that will give law enforcement a unique issue and maybe a stumbling block here for them. But have you seen interest in law enforcement into DeFi? Has law enforcement approached you guys or spoke to you guys about tools for DeFi?
I'm actually probably not the person to ask about that. I don't do a lot of work with our customers, our law enforcement customers, directly on the kind of the more sales and product side of things. But I do know that now I am scoping the crypto crime report right now to start writing, and DeFi is one of the top requested subjects. So we will be focusing on that and educating on that over the next few months. So, you know, you can look out for, hopefully that will make it into the crime report. But it's when I ask people, what do they want to learn about? What are they nervous about? What are they interested in? When it comes to criminal activity, it's, you know, the top requested subject is DeFi, and the extent to which that's because it's just a hot topic, or because this is something that we really need to reckon with, is hopefully I'll kind of get a better answer to that over the coming months as I deep dive into it. But it definitely is top of mind for a lot of people.
And like you mentioned, I mean, especially even for your company as a business where, you know, we mentioned that, you know, besides the government contracts, a lot of businesses also from helping exchanges be compliant. But, you know, as the money shifts more to decentralized exchanges that don't have to deal with compliance, you know, it's a totally different animal. I mean, I think that the centralized exchanges are kind of feeling the heat a little bit from the decentralized, from DeFi and from the DEXs. Although there obviously, I think there will always be a need for centralized exchanges, whether on-ramps and off-ramps and on-ramps, or just a name to trust as opposed to a decentralized exchange. But last question before I let you go. You know, you said you've been doing this for a number of years already, and just like on a high level, what has been the biggest change in your mindset about blockchain from before you started with analyzing blockchain, before you started Chainalysis, and where you are today?
So the biggest change in how I view blockchain is the question. I think the biggest kind of aha moment for me was when I started to think about money laundering and how big of a problem money laundering is in the world. How shocking it is, how hard it is to tackle as a global problem right now. And how much money is probably, like, we know the very low bound estimate of how much people are you know, moving ill-gotten fiat currencies around and evading regulations, tax evasion, all the like. There's so much financial crime. And now I can log into my reactor, which is the core product of Chainalysis, and I can in one place think about how much criminal activity there's happening. And while we will never be able to, right now we're not able to estimate money laundering when the source of ill-gotten cryptocurrency was off the blockchain, we can still, it was really powerful us to see, okay, these tend to be the off-ramps for illicit activity. And because there's not a ton of, okay, these are the banks in the banking system in, you know, Japan versus the banks and banking system in Mexico, and this completely disaggregated system. It's one place where you can go in, log in, see how much scamming activity there is using cryptocurrency, see where those funds are going, and start to, you know, educate people on the trends for off-ramping illicit funds. So to me, it's a much more inspiring picture when it comes to thinking about the daunting problem of stopping money laundering, which is probably one of the biggest problems that we face in the financial world. And so I think that when I started to make those connections around money laundering and cryptocurrency versus fiat, I think that was a big kind of aha moment for me on the power of cryptocurrency.
Well, you know, I appreciate, you know, because all the research that you guys put out really does help everyone else see what you realize, which is that, you know, which is that, you know, listen, it actually is easier to track. It's way easier to track these type of illicit activities when it's on a blockchain than when it's fiat. And so I really appreciate all the excellent research and work you guys are doing. Whenever it comes out, the report, I always make sure to read it because it really does give a way better and deeper picture than what we just hear on the news. So I appreciate the work you guys do over there and taking the time, and looking forward to the Geo report when it comes out. Kim Grauer, Head of Research at Chainalysis, thank you so much for joining me. And for all our viewers at home for Reimagine 2020, I'm Yonah Hochhauser. Thanks for watching.